Mark just made the comment that infrastructure can be seen as safe compared to the wild child of private equity. I think you could also say that private equity is seen as safe compared to the more wild child of venture capital, and that's what we're going to be focusing on next. Depending on which data provider you follow, there are just over 400 unicorns currently in the world today with an estimated aggregate value of about $1.3 trillion. So I'm very excited to bring on our next panel of experts, which is unicorn hunting and investing in the next wave of innovation. So I'd like to welcome the moderator, Maha Abouelenein, to the stage and her fellow panelists. Please join me in welcoming Maha.
So the Middle East is no secret that we have our own unicorns. And we're very proud that some of the companies in the region, Karim and others, have been able to be unicorns in the region. And we understand that, innovation is driving a lot of what is driving industry and business today. I'd like to take a minute to have everyone kind of just introduce themselves, and then we'll dive right into the questions and talk about how we're going to be hunting for the next unicorn, not just in the Middle East, but globally, and the importance of the unicorn kind of North Star, and where you guys think everyone need to be investing in, thinking about innovation, where we need to go. Let's start off with you, Noor.
Thank you very much, Maha. My name is Noor Sweid. I run a VC firm in Dubai called Global Ventures. We focus on trying to find the unicorns here in the region, across the MEA region, and scale them globally, enabling them to enter new markets.
This is Jenny Zeng. I'm come from MSA Capital, China First Venture Capital Fund. But recently, a few years, we moved towards to MENA, this region. We fully believe this region will be the next big market, have a lot of unicorn companies.
We like to hear that.
Yeah. Hi, everybody. Saleh, Romeih. I'm a managing partner of the SoftBank Vision Fund. As most people know, we are a $100 billion fund focused on what we call tech investing. I serve on the investment committee. I serve as a board member. I run the European office. I get only one salary, though. But very glad to be here and with these esteemed panelists. Thank you for having me here.
Terrific. I'm Tim Draper with Draper Associates. We're a global venture fund, and we have a network of venture capitalists around the world, and Noor is the most recent global VC. By the way, great brand. Global VC is our most recent addition, and it's great to have someone here in the region because it has this feeling of change. And when you have a feeling of change, you can create unicorns, or what we call rhinos, which are fat unicorns. We think that this is really one of those times and one of those places where there's so much change happening that entrepreneurship is really going to thrive.
I mean, if you think about it, everyone wants to be an entrepreneur. Everyone wants to work for a startup. Everyone wants to be part of this ecosystem of entrepreneurship. Let's kick off with you, Tim. Where is the next wave of innovation coming from, in your point of view? And what are your thoughts on that?
So I was very lucky because I was there for the internet boom, and as a venture capitalist, and we got to see the internet transform industries like media and communications and information, gaming, entertainment, all these industries, and they're big industries, 10 to $100 billion industries. And I got to see that, and I thought, wow, I was so lucky I got to see that. And now, all of a sudden, there are these new technologies, artificial intelligence, Bitcoin, the blockchain, smart contracts, quantum computing. They're all going to start transforming industries that are 10 to 100 times bigger than the industries that were transformed by the internet. So you're going to see a transformation of banking and finance and insurance and healthcare, and government itself is going to go through major transformations. The big opportunity, I think, is the decentralization of everything, where we're opening up the world. The world used to be very tribal, and now we're very much global. Mm-hmm. And decentralization, that technology forces everybody to think globally. And you're seeing governments trying to reposition themselves. And when you have that kind of turmoil, it's the best time to be either an entrepreneur or venture capitalist, because when there's no change going on in the world, people are all very happy and they sort of push down the entrepreneurs. But when there's this crazy, weird environment where nobody knows what's going to happen next, the entrepreneur is revered.
The winner.
And becomes the winner, and so either you want to be an entrepreneur in this environment or you want to be a venture capitalist. It's a wonderful time to be both.
Jenny, talk to me a little bit about your point of view from China. You are established, you're one of the largest VC firms in China. How do you see it from your point of view, and where do you think the next wave of innovation is coming from in your market or anywhere else in the world that you operate?
Yeah, I totally agree with Tim. I think the technology have no border. Internet is flat. That's the reason we start from China market 5 years ago, invest a little bit to Silicon Valley. But right now we have an underground team in MENA, around 5 people. We dedicated to want to invest in this region. In China, frankly speaking, my professional career lasted 20 years in China venture capital private equity ecosystem. I would say this kind of experience just gave me a lot of, keep me very exciting every day. So I would say from the first wave of internet booming 2000 year, and back to 10 years ago, mobile internet booming in China. Definitely, as you guys already know, the top 10 big company of internet in this world, half of them come from China today. So Chinese have a very small market, 1.4 billion population, and people working very hard, and people learn a lot from Silicon Valley, but they adopt a lot of technology and application from US, but they build their own super apps. For example, one of our portfolio companies, Meituan, so today's valuation around $80 billion. They build everything on that. Tencent, everybody know, they build the super app of WeChat. People every day living their life there. They open the chat, they do payment. So I would say our team, we really want to build most of the expensive kind of most of a successful kind of ecosystem and the business model in this region. This region have very low penetration for e-commerce, mobile payments, P2P lending, and the logistics definitely. So we want to build the core technology infrastructure here. We already bought a lot of our portfolio company, like the largest big data health company in town, and the largest genomic sequencing company here. And this trip we build one of the largest logistics company here, want to build the business in this region. So for China, I would say, right now we in the third wave of innovation. We believe most of the AI big data enabled business. We believe this AI big data will disrupt a lot of traditional business. And the second believer is emerging market, which we're so excited for this region of MENA.
Wonderful. Saleh?
Yeah, I mean, I'd just like to go back to what Jenny and Tim were saying. There's no doubt that we are on the cusp of probably the most exciting phase of this tech revolution, right? And simply put, it's because the speed of transmission, the cost of storage, and importantly, processing speeds have reached a point where we really believe that this notion of AI is going to transform so many of these traditional sectors and industries that Tim and Jenny mentioned, right? To us, that's very interesting. So for us, it's not so much investing in tech per se, it's just that we believe that tech underpins the way so many traditional industries are going to get transformed. That, to us, is the most important part. Now, what excites us in the Vision Fund most are essentially 5 things, right? First, just because the size of our fund, we look for big underlying sectors to invest in. That's important. Rather than looking for niche players, we look for big underlying sectors. And certainly, as Tim mentioned, there are some massive sectors, be it in health tech, in mobility, in logistics, all these sectors, fintech, are huge sectors that are ready to be disrupted. That's one. Two, we look for companies that have already established kind of a market-leading position, so some proof of concept that they're able to dominate that particular sector. And that's important, Maha, because this notion of network effect becomes important. Size begets size, of course. And then thirdly, the important thing for us is to see a level of growth that suits and matches our expectations and our ambitions, right? So we look for companies that are growing, and certainly there's no shortage of those. Fourthly, what's important to us, as you mentioned, is the drive of the entrepreneur, the vision of the entrepreneur. That's critical in this equation. Because ultimately, if you don't have vision, it's very hard to have a strategy and a plan that you can execute. Everything is driven off vision. So to us, knowing the entrepreneur's ambition, knowing the entrepreneur's capabilities, his or her capabilities and the ambition that they have is critical to that, right? So we have to believe in the entrepreneur and the founder. And then last but not least, I'd like to come back to this idea that AI and tech has to be pervasive in that particular sector. Our belief that tech can transform that sector and is going to revolutionize that sector.
Any sector.
That's it. So as long as you have the, sort of an alignment of those 5 vectors, that's something that excites us. And that's something that we want to be investing in.
Absolutely. Noor?
And I'd like to say something. SoftBank, it came at, that was just brilliant strategy. I mentioned this to you. To come at a time when Sarbanes-Oxley made it so difficult for anybody to go public, no great entrepreneur in their right mind would ever want to go public at this point, but SoftBank filled this huge gap, and so thank you for that, and thank you to both the investors. Thank you to both your major investors, because they did create liquidity where there was none. And we saw companies dying on the vine because they couldn't go public back in the 2004, 2005 timeframe. And you guys came and kind of saved the day. So good job.
Thank you. Unprompted. Thank you very much.
Noor, you built a business here in the Middle East, and your family business has invested in a lot of companies. You know, we've talked a little bit about the different areas of next waves of innovation that are happening. But a lot of people don't just invest in companies, they invest in people. And he was just pointing on about the whole thing about we invest in founders. What is it going to take to upskill the workforce? And are you going to be investing in companies that aren't investing in making sure that the employees are lifelong learners, the founders are making sure that they're disrupting themselves in terms of staying up to speed with what's happening? Because technology is accelerating everyone's ability to either you have to innovate or you literally will die. What's your take on that?
So, first of all, I think that we're very fortunate to live in a region which is one of the youngest in the world. It poses its challenges, such as how do you upskill your workforce, but it also means that we have a rising population. So half the population of 400 million people is under age 30. Obviously, they do need to be educated, they do need to be upskilled, as all populations do across China and the US consistently in this fast-moving environment. What we're also fortunate enough to find is that the founders we're backing are properly globally competitive. So we're not backing founders in the region because they're from the region. We're backing founders in the region because they happen to be able to compete globally. And we've seen that repeatedly. We've built out this fantastic portfolio where our founders have gone from being UAE-based to being UAE, New York, London in revenues, not in costs, with at least 30% of revenues derived from outside markets. And this goes across the board. So from software as a service companies, we've backed a founder who was the first in the region to integrate with ServiceNow, who now has clients including Georgetown, the city of Tampa, the port of Tampa, and just came as a runner-up for the best the best security solution in America, won an award at the Javits Center in New York last week. So when you see our founders being able to do that, when just a year ago he was a UAE-based company, or another one, as we were talking, has gone from UAE to UAE Asia, from 3 million monthly revenue to 20 million monthly revenue. And as they grow, they create jobs. As our founders have grown over the last year, they've created 860 jobs in the region. Wow. Now these jobs, normally, and especially in the region, need to be at that competitive level. Otherwise, these founders cannot compete internationally. What they're lacking, back to Tim's point, is access to capital. We have a problem much earlier than the US, and these founders much later down the line have a problem, which is when our founders get to a stage when they have a few $1 million in revenue and want to raise 10 million, we have to syndicate these deals. We cannot sustain these founders with regional venture capital because there just isn't enough. So we have to syndicate internationally, we syndicate with Excel, we syndicate with Gobi. We have to attract that and exert energy as VCs and energy as founders, syndicating these smaller deals because the capital doesn't exist yet in the region. So we don't intentionally say we will only back founders from the region because we're trying to support regional growth. We think regional growth and upskilling will come naturally as these founders grow and create jobs for their companies.
So it's where the talent is.
It's where we have a lot of talent. It's really hard for someone to convince me that of 400 million people, of which half are under 30, and at 40% youth unemployment in some of our markets, so the opportunity cost of starting a company is actually close to zero for a lot of these people. We cannot find 100 awesome founders, right? So when you take a look statistically, you're going to find them. They're going to be self-motivated. They're driven. And actually, I argue, and some of our investors agree, especially our US-based investors, is that our founders are 10 times stronger than founders in countries and markets where there's a lot of capital. They have to work 10 times as hard to start their companies. They have to work 10 times as hard to land a client with long sales cycles in the region. They have to open in Jordan or Pakistan for talent instead of just their backyard and down the street, or Egypt, and they have to be cross-border. They have to get so much more done to raise $1 million than a founder in the Bay Area or in New York might have to get done. So by the time they've actually reached $10 million in revenue, they're really the top founders globally. And when we position them globally, they're able to not just compete, but also succeed.
Yeah, they're scrappier and they have to go through more hurdles than
they're profitable.
Their counterparts.
From a very young age, they're profitable because they cannot bank on, oh, I'll raise that $10 million later, right? So there's this thing where every dollar counts, which is not the same when we look at founders globally at this point in time. And venture capital has cycles. Where we sit in the cycle is where, and Tim, correct me if I'm wrong, but it's kind of where VC was in the Silicon Valley area in the 70s and 80s, where we get to work with the founders for 3 to 6 months before we make an investment. We get to see if they're coachable. We get to see where the value we can bring to the table is. We get to really make introductions with them and help them grow their companies before we decide to invest or as we decide to invest and work alongside them as true partners. And for them, every dollar matters. No founder here comes to a VC and says, here's a term sheet, you have a week. It doesn't work that way. So we're still operating VC in the Bay Area in the 80s, and where it's a very fortunate position we're in. It also means that the founders we support, we give a lot of effort to.
Yeah, good.
I would add something to that. It is true that it feels a little bit that way. Like it feels a little like China did in the early 2000s, where it's like, hey, things are going. There's a lot of change, and that creates more entrepreneurs, and great things can happen. I recommend everybody think you're not going to become the Silicon Valley overnight. China took about 30 years. Silicon Valley took 60 years to get where they are today. So you have to be patient with it. And I love that you have already gotten your fundraise, or it's almost there, because it makes me feel like, okay, good, we've got some stakes in the ground. We're starting to build the base, the ecosystem. It'll take time, but there will be great returns from something like this. So I think it's really exciting. And we've been able to start these ecosystems in a lot of different places. And that has China, for one. We were first Silicon Valley venture capitalists into China, too. And we noticed that as long as people are patient, they're willing, because a lot of people say, hey, let's put Silicon Valley here. And then they build a nice building and they say, entrepreneurs, come on in. And it's not enough. You have to kind of create an ecosystem. And we tried to do that with Draper University. We get students from all over the world, and they come in and they eventually get hero training, and then they go off and they start big businesses. And then, but they often go back to their own countries to do that. You can't expect that to happen overnight. But if you get, you know, when China turned around, was we backed Baidu. And it wasn't when we backed Baidu, but it was when Baidu went public and the range was 12 to 14, and the first day it closed at 126. That woke up the entire Silicon Valley investor group. They all came and flew to China the next day, and it started to build from there. The same thing can happen here. Noor is going to get a unicorn or hopefully a rhino from this region, and we're all going to throw ourselves into the
DFG first office in China and Beijing was in the same building, like 2000 year that year. I remember Zhang Fan there. Yeah, I totally agree with you. Every time I come back to this region, you know what I feel? I feel like I saw the time machine. Everything happened last 20 years in China. Right now, one by one happening here. I love the word ecosystem you mentioned. So I'm so lucky. I was earlier year to involve the whole ecosystem business in China. Rather than for myself, the investor, I treat my own self as a founder. And also back to your question, the entrepreneurship, keeping me number one excited for China, which is I'm so appreciate the entrepreneurship in China. So the Chinese are working so hard, they have no vacation, they have no holiday. So 996 kind of like a working kind of style. And also the nerve very fast, and the try fast and feel fast. We say, you feel fast, you can found the second business. And also we so appreciate the, we call serial entrepreneurs, which have founded multiple successful business already, like 2 or 3 public company in Nasdaq and Hong Kong. Then he still have drive and ambitious, building the next big things. So we make a lot of those kind of serious founders and the pioneer of this niche sectors leaders.
So, you know, the title of the panel is talking about, you know, hunting for the next unicorn. Is the unicorn worth the hype? Should startups that are in the room or listening today, you know, dream and hope of becoming a unicorn for that exit? Well, I mean, some companies are getting a bad rap that they're overinflated and hasn't been worth it. Talk to me about the unicorn North Star.
So here's the way I look at it. We'll invest in startups. We'll invest in 70 companies in our next fund. And then we'll focus on sort of the top 20 and then maybe the top 5 to 10. And then eventually, like the top 2 will end up in their portfolio. We're looking at it and saying, look, if we've got something that's got the potential to be a unicorn, we're gonna let the rest of the companies kind of fend for themselves, and we're gonna really focus on those ones that can become those great unicorns, and maybe rhinos. And the difference between a fund of ours that gets like a 20% return and one that gets like a 70% return is how high is up for the biggest winner. So all I'm focused on, when I'm sitting there talking to an entrepreneur, all I'm thinking is, if this, a lot of great venture capitalists are all telling me, talk about all the risks to making an investment. All I'm thinking about is, what if this works? Mm-hmm. When I'm interviewing an entrepreneur, what if this works? If that works, and maybe it works and it becomes a $10 million business. I don't care. But if it works and it becomes a $10 billion or $100 billion business, that's when I say, okay, I'm willing to take all those risks, all the crazy things that can happen to this, because I know that if it wins, it's going to be enormous. And we want to make sure that, so that's the way I've been investing. And it's working.
If it ain't break, if it's not broken, don't fix it.
Yeah, I mean, just to touch on what Tim mentioned, the role that SoftBank plays is coming in at a stage where these unicorns are now ready to grow even bigger, further, right? And how do we do that? Well, for one, we help them grow cross-border, right? Because of our breadth and because of our size, We have connectivity in practically every geography around the world, including this part of the world, thanks to our partners, Mubadala. And what we do is help them grow cross-border. So if we take a company that's sort of become a unicorn in India, we're able to grow them into China or the US, right? So that's one vector, cross-border. The other way we do it is now that we have over 80 companies within the Vision Fund itself, not to mention a slew of companies that sit within the mothership, SoftBank Group, we're able to create a lot of B2B opportunities, right? So there's a lot of tech companies that have symbiotic businesses or symbiotic relationships with one another. We are actively connecting those and helping to grow in that. The other thing we do is that so many of these companies are growing. Within the Vision Fund, we have a lot of finance knowledge, like myself, within the Vision Fund, so we're able to give them a lot of direction, a lot of connectivity to help them lower their cost of capital and give them access to capital, right? Capital is the oxygen for a lot of these companies, so we help them do that. And then last but not least, we continue to maintain an active dialogue with the entrepreneur to be able to push the entrepreneur to get to the next level, to keep thinking ambitiously, right? So if we can do that holistically, right, we believe that these unicorns, kind of glorifying these unicorns is good because we're able to pick out the winners that can continue to keep growing. That is our role.
And it gives an ambition for that entrepreneur to try to target to reach that goal. Unfortunately, we are out of time. I wanted to thank you all for being on our panel today. Unicorn hunting, looking at the next innovation, upskilling in people. Thank you for all being with us today.
Great.